Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is 5 a.m. Eastern Standard Time, the 9th of September. Okay, so as I mentioned to members last night, expect a turnaround Tuesday, whether it be a gap up in the morning or a push down with a rally into mid to late day. One of the two, but it was going to come. Is this the bottom? I think not. I think that with regard to the triple Q names, let's bring up the Nasdaq 100. They have been very, very overbought. Not so much on a daily time frame, but I've gone over with Microsoft. I won't bore everybody. Microsoft quarterly basis, yearly basis, extremely overbought on RSI relative to the Bollinger Bands, third standard deviation Bollinger Bands at that. So a nasty sell-off was predictable, and we were seeing the VIX rally for several days, couple of weeks for that matter, in a row, along with the S&P 500 being up. And I believe that this morning, the VIX is down. Oh no, now it's back up again. Here we go. You can see here, it was down. Now it's back up. What's the S&P 500 doing? Up as well. Beware. Be very, very careful of a fade. So I would not go chasing this rally. What you want to see is a pullback, a higher low, and then a rally. So in short, one, the market needs to stop going down for us to find a bottom. Pretty simplistic, but many people don't wait for that. They're just going to buy the bottom. They figure it can't go down any lower. All of a sudden, gap down. Or two, you get a rally like you're seeing right now, bright green futures. FOMO kicks in, and they start buying. What happens? They're licking their wounds by the end of the day. So wait for us to stop going down, then a higher low on a pullback, then a breakout to new higher highs. That's when confidence builds. Good morning, Trent. Good morning, Patrick. Not until then. So right now, all I'm doing is I'm acting as a spectator, not a speculator, but as a spectator. I'm going to watch how this plays out. We have dry gunpowder on the sidelines. That's ideally the way you want to be positioned, is ready to take advantage of opportunities as the markets present them. We are not viewing this morning's price action as opportunity. Perhaps it's the beginning of the end, but when I say the end of the sell-off. Longer term, I think that we will rally into Election Day. After that, all bets are off. I'm not sure what the heck is going to happen. So we'll position accordingly in advance of the election to be very insulated from the outcome. So more to come on that. The Russell 2000. I'm going to check back in on the VIX SPY correlation before we sign off today because it's really important. It's been a very, very key indicator of where this market may be going. Russell 2000 up this morning. Again, as we've been seeing with the S&P 500, I think that what we have here is similar to what you had back here, back here, back here. Is a short covering rally. Turnaround Tuesday. The best that could be hoped for is they get some news out that new vaccine, whatever they could do to spin the market on its head to keep this rally protracted for a couple of days. I think that we'll be lucky to see back-to-back days for a while to the upside, in particular on the triple Q names. The dollar continues its rally, short-term rally anyway. So it is acting as a headwind for gold. It is broken out above resistance. We may head up. We need to be prepared for what was the high here? High of 93.90. We're a bit overbought on the 4-hour chart, but we can go higher here. And you can see this W formation on RSI. This is exactly what we're looking for on the major averages, right? You had your W formation form here, left side of your W, pivot point, higher low, breakout. And that's what we're looking for on the major averages. But as you can see, with the Nasdaq 100, we're not there yet. Let's take a look at oil. That's rebounding a bit today. But again, we continue to put in lower highs, lower lows. Perhaps we've stopped going down here. But you want this all to be retested at some point in time in the future. And that retest is a good thing. One name that we're eyeballing again, we booked profits on Intercontinental Exchange. And as the dollar gains some strength here, I think what it's doing is providing us some opportunity to re-enter this trade at lower prices. So hopefully the correction on Intercontinental, ICE the symbol, ICE, the symbol, continues, and we'll look to re-enter this trade. Let's check out gold and silver. Let's go to the spot price. Good morning, Trish. J.A., good morning. Here we go. So silver prices, as you might expect, are down, but not horrible price action, considering the strength of the U.S. dollar. I mean, if you take a look at, let's clean this all up. Let's start this all over again. It's way too messy. Fresh perspective. What are we looking for here? What we're looking for on silver is, at the very least, to hold this support level. And it's very bullish that we're not breaking down in light of the strengthening U.S. dollar. What I want to do here is set up a tripwire. within this trading range and create an alert letting us know that we're beginning to see early stage breakouts here. We are long of silver. We'll be looking to add more. You can see we're flirting with a breakout above this tripwire already. And if we get the breakout, we'll look for the retest, and perhaps we'll look to add to our silver position. Let's move this down a little bit. Not too far down. Because we want to give it a room to run, then pull back and a retest. RSI improving. So the groundwork is being laid for silver to flash a continuation breakout. Because when you take a look at the dollar, still pressing up higher, very strong, relative to silver, which is just consolidating. Oops. Pat, I'm not sure about that Tesla distribution. Probably. I would think that they got rid of it pretty quickly. Gold. Let's do the same here. Clear this all up. Start fresh. Here was our breakout point. Having a problem with this drawing tool lately. Okay. So gold is actually coming off the lows of the session. Here was our breakout point. Critical resistance, support now. And were we to set up a tripwire here, we've already broken out. So we've broken out. Nice little consolidation here. I think there's a good chance that we run on gold. And again, folks, this price action, this consolidation in the face of a rising U.S. dollar is very bullish. Now the dollar's starting to weaken up here a little bit, but it can certainly rally back. It's very bullish. So we're still, not to repeat myself, but I'm going to repeat myself. We remain very, very longer term bullish on gold, silver, the miners, etc. So the game plan has not changed, especially as we move into the election. I can't imagine not being long of silver, the gold miners into election. Copper prices weak. They've broken support a bit. Lumber. I went to the supermarket the other day because now I'm on my low carb kick since margarita season is over. So margarita season sadly ended on Labor Day. So I went in to get my low carb, low sodium turkey and all that other stuff. And a paper bag now costs 12 cents versus a nickel for a plastic bag when they were charging for it pre-COVID here in New York. So we're seeing inflation in bags. So lumber, while it's correcting on an intraday basis and a weekly basis as well, still in a bullish uptrend, but correcting at current. Good morning, NY Jets. What else do we have? What's the Dow doing? Dow up spot 4%. Keep in mind, folks, as we go into this, I always get worried. As we go into the day, it's a pretty chart, but we don't have a breakout. Right? Still putting in lower highs. So the key to this game is to ignore this price action. Don't get baited in. Nat gas, weak, coming off its highs. All right. I want to check back in on SPY versus VIX, and then we'll go to some chart requests. We'll go to about 5:30. E-minis up spot 6.4%. Gained a little steam since we last looked. What's VIX doing? It has gone negative again. Good to see. What we want to see is support get taken out and the S&P 500 rally. Okay, let's do some chart requests. Pat, you sent me a couple last night, or one or two. Bear with me, I'm going through my... Oh, SWBI. SWBI. I mean, what's not to like here? Yeah, it's in a correction. Let's do our normal deep dive. Well, this when you do your deep dive, all of a sudden your knee-jerk reaction doesn't seem all that wise. We do have a reversal month so far. And this is why it pays to pull back and take a look at the monthly charts, weekly charts, etc. We were overbought. We're pulling back. I mean, they can't make enough guns to sell. And it doesn't appear as though the proximate cause as to why gun sales are going through the roof is going to end anytime soon, especially into the election. And as we see more headline risk coming across that there's going to be any type of cheating, mail-in ballot cheating, and concern that you're going to see a Biden-Harris presidency. You're going to see gun sales rip. I'll be honest, I'm in the market myself, and I never wanted to buy a gun, but it's here. So, bearish reversal bar on the month. Let's take a quick peek at seasonality. Seasonality is not wonderful going into the back half of the year. It's more of a New Year play. And that data goes back 18 years. So, pretty solid data. Let's overlay some trend lines. All right, so we need to manually draw where we believe support is. And I believe that we are poised to hit it. We did so last month, and we bounced. 1575 is the number. Weekly chart. So on the weekly chart, you can see that the automated trend lines picked up on this support level. And it coincides with a volume shelf as well. So there was a tug of war here at one or two point in times in life at the 1625, give or take a nickel level. But I don't know if it's going to hold. Ideally, it doesn't. We get an overshoot to the downside, and we hit that 1593 mark. And then we pop up higher by the end of the month, recapturing the 1662 mark. That would be bullish price action. Lower highs, lower lows on weekly RSI. Maybe we pop up by the end of the week and we form a higher low or a W, but we're not there right now. We're breaking down to new lower lows on RSI. So while we bounced off of support, I'm not a buyer quite yet. Lower highs on Stokes. They are down below the 50 mark. We know what happens. Rallies tend to fade, just as they did day 1, 2, 3, 4 days in a row. Rallies faded. There's no reason to believe that they're not going to again. We have a lot of volume above. So while I love the story, I'm a bit cautious on it at current. Let's overlay weekly trend lines on a daily chart. And for those folks not familiar with TrendSpider, this is the program that we're using. Use the link below in the description area to get 35% off any of their membership levels. Let's move on. So here's that weekly support level on a daily chart. I can't buy it at current until these Stokes flatten out and begin to hook back up. So I'm a speculator right now. I'd be watching it. Ideally, we overshoot to the downside. We get a reversal. That would be bullish. That would be my take. RSI losing momentum. I would just watch it right now. I see no reason to go running in and buying the shares. All right, Rocket Mortgage. Let's take a look at that. That's why Pat has a rocket symbol up there, Mr. Emoji himself. Excuse me. All right, let's see what we're doing in the pre-market. Now, I love the story with not just more Rocket, but with the regional bank plays, which were up last week. They showed relative strength versus the S&P 500 for the first time in a very, very long time. Why? People are fleeing the cities. Housing prices in the suburbs are moving up. Applications, not that this is relative to the U.S. mortgage market, but applications for the wealthy moving down into the Caribbean, whether it be Barbados, Grenada, etc., are skyrocketing in advance of the election. So Rocket Mortgage up in the pre-market. They announced earnings back here. Their earnings were good, but they got hammered. So we opened up a position on Friday on the dip, and we added more yesterday on the dip because the story longer term is very, very good. And especially if, because I was challenged with this, especially if yields move up higher, because there will be a flood, a deluge of people trying to lock in low interest rates if yields move up higher. So while people may think that's a negative, it's not. Longer term, it may be a negative because it's going to hurt people trying to qualify. But in the short run, it'll help pull forward applications that people might have waited for a year or so to next quarter. So let's take a look at it on a... There's not much data here, so it's hard to use this chart. I mean, this is a daily chart, and you don't have much data. You know, a negative day yesterday. Would I go adding more right here, right now? Probably not. If we recaptured 24.51 and we close there, I might consider it as long as our Stokes were flattening out. But again, not a lot of data here. Forget seasonality. Let's go to a 4-hour chart and view it from that perspective, because we have a lot more data to analyze. You know, stiff resistance above, no doubt about it. It was support here on the 4th. It failed to hold. Now we have to wait for it to recapture. RSI week, Stokes perhaps putting in a double bottom setup. So I would not chase the shares at current. If they faded and then rallied and reversed to close with a bullish key reversal on the day, that would be interesting. But right now, I don't see a reason to go stepping into a rally in the morning. Certainly not. And I would wait for a bullish reversal day before I bought any pullback or added to my position. Let's see how we closed out on a 2-hour basis. Kind of grasping at straws, trying to find data here. No compelling reason to go buying right here, right now. If you're going to be very disciplined with the stop, you know, if we pull back to 22.42 and we retest that mark again, I would use a stop loss right below it. Let the market take you out and add more on a breakout above these two resistance levels. And I'm carrying a pretty heavy position right now, so I don't plan on carrying this large of a position for the longer term. Right now, it's just a trade, and I plan on lightening up on a rally. So be forewarned that once we see some profits on it, I'm going to lighten up, and then we'll carry a position longer term. All right, so that's Rocket. Not a lot of data. Those are my thoughts. All right, Tesla. What were they down? 18% yesterday? I mean, I said this wasn't going to end well. And I'm not convinced that the damage is done here. They did not do the small investor any favors by splitting those shares. That was all hype. And the air is coming out of that balloon really quick. I think ultimately what we're going to do is that we're going to come back down here to 270.64. They may defend it up here. They'll carry it a couple of rounds. But then ultimately, after a short covering rally and a fade, they'll still lure some small investors back in on a counter trend move. But then ultimately, I think that it fades and it breaks to move lower. We're right at the rising 50-day moving average. Stokes are extremely weak. I think that if you get a rally in this, whether it be 1 day, 2 days, shorts are going to lean into this. And they're going to take it lower. So I would avoid, because I think that the shorts are going to be eyeballing this. They smell blood in the water right now. The tide has certainly changed. The story has changed. So I would avoid Tesla. I'm not confident in it at all right now. All right, and with that, oh, you know what? I have one more symbol to go over here. And if I could ask you folks to smash that like button, I'd really appreciate it. I got these 15-year-old stock traders with prop money. They literally use prop money. All those stocks are cash. It's prop money. I was watching this kid on, he exposes a lot of these guys on YouTube, and he zoomed in on the money that they use, and it says prop money, right? They look like real dollar bills or $100 bills, but it's stamped prop money. I think the YouTube channel is CoffeeZilla. Interesting guy. Tracon Pharma. Let's pull back. Yeah, because the knee-jerk reaction I had on the daily chart was, wow, you got to avoid this thing like the plague. And I think that you still do. But on a monthly perspective, the chart is looking very, very good. It's just ahead of itself on a daily basis. We are breaking out of a very long-term base. Indicators are hooking up higher. It's early in the month. Maybe it'll fade. Weekly chart. On a weekly basis, we broke out last week. We have a continuation breakout this week. Here's the play. The play is, because we're trading above the third standard deviation Bollinger Band on both a weekly and daily basis, that's not going to last unless they come out with an announcement on their new trials of this or a partnership with that. I want to see a retest of this breakout point. And I would be very interested in the trade at that point in time. And we'll keep this active for a couple of weeks. Daily chart. Yeah, I mean, it's nuts. You can see how we continue to get rejected at the third standard deviation Bollinger Band. I don't expect anything different. You know, perhaps if we pull back, we do a dance along this daily breakout point. It becomes interesting because the froth has been taken off. So until then, set it and forget it. Set your alerts and don't look at it again. Let the system tell you when to get involved. Let's see, do I have any others? That appears to be it. All right, we're past the 5:30 mark. Folks, thanks for joining in. Everybody have a profitable trading day, and I will talk to you tomorrow morning. Members, I will talk to you tonight on Market Wrap. Be well.